how can we promote regional trade through outward remittances as well, outward payments using the various mobile money channels. Commercials must be win-win. In partnerships, we should create commercials that helps the parties to be able to get the best in terms of the partnership, and we get a win-win for all. And so the commercials are important, and that is something we need to look at. Trust, getting the customer to trust the platforms, to believe that you are asking a guy to stop holding his cash, which he can feel, to doing something he can't feel but expect to work. How do you build trust? How do we take away the concern of fraud? How do we ensure that the customer believes in the platform and he knows that every time he wants to use that platform, it will be available? It's important, because the day he feels the platform is not available, he will go back to cash because it's the easier choice. And that, for me, doesn't help, because the cost of cash is so much. To the convenient customer, he doesn't see it because of the immediate convenience, but the cost of cash is so high. If you want to do a transaction today that requires cash, it requires you to move from one point to the other. Count the cost of travel, count the time, the opportunity it takes to do something else that you are using in traffic. But the customer feels that that is his best because he can trust that system. We should build trust around the digital platform so that the customer can trust that platform away from cash, and then we'll be able to win and unlock the potential. I'll close, next slide. I'll close with the use cases that we believe will stimulate the right behaviors and the right adoption. The government side is important because that's where we believe there's a lot of activity, and government payments should begin to look at that. The drive from the Vice President is important, and we need to continue to deepen that. And we also need to look at the open market where the opportunities sit. I made some comments about the opportunity within the informal sector. 70% of the payments happen then mainly cash. How do we go into that space? What kind of solutions would help to create the right adoption? So the open market is important. Today you go to Makola, and to a large extent, you're able to get some of the women to accept mobile money. How do we make that a complete turnaround where everybody will be willing to accept that instead of taking cash from you? And how do we incentivize such that the account handler or the store lady who is selling the item is also receptive? How do we achieve that? Because sometimes you go, the platform is there, but you say it's not working because he wants to take cash. He wants to feel cash. We go back to the issue of trust we talked about. We go back to the issue of the uptime of the platforms and the incentives that are there for them. And I think we'll be able to encourage that kind of adoption. Digitizing the various value chains. And here, there's a big opportunity there as well. Today, there is the agri subsector that we are looking at. We've done some work with cocoa farmers already. How do we improve their way of doing their business with their farmers? From the tilling of the land to the cropping, to the insecticide, to the harvesting, all those services can be digitized, and the farmer can access those services digitally. Today, a couple of weeks ago, I was talking to someone who had come in, and he was looking at how he can commercialize spraying of farms using drones. Okay? Now, this is someone who believes he has the specialty around delivering that service to farmers. There are two things you need to look at. One, he'll be more efficient because that is his area of expertise. He'll get the right mix of the chemicals, and he will reduce the cost, because if a farmer goes to buy a particular quantity of insecticide, he probably may be forced to buy more than he needs. So there's cost he doesn't need, but this will be more efficient. And then a drone, so specific to the area and location, and proper work is done. And it doesn't require the farmer's hassle. And because it will be delivered in a bigger quantum over a bigger economies of scale, you find that that becomes a cheaper option for the farmer. And the farmer can access that electronically, pay for the service, and his farm is sprayed. So those are some of the opportunities within the agri-sector. And then those who even sell these services of plowing the land, they also can be digitized. People can plow the land and payment can be made digitally. And then advanced services, where we are talking about insurance, we are talking about savings, small credit, small loans, and we're also talking about investments, pensions. These are all opportunities to bring many more people into the space. And I believe that by the time we've looked at all that, looking at the various channels that the assets can be provided, we should unlock the potential in this market.
Enterprising merchants, definitely. MTN Momo merchant is the way to go. Looking at the larger merchant ecosystem, I advocate all the time for women to be enterprising, and when they're enterprising, they should have the basic financial management skills of bookkeeping. Luckily, the merchant or MTN Mobile Money does this for you. You can track every single transaction. You can add up, you can subtract, but everything is right in front of you. No matter how small your enterprise, no matter how large your enterprise, you have this done for you, and it makes financial management very straightforward. You can be in the market, you can be in a shop. Having that tool is a world of difference. It makes a world of difference, and it enables savings. Enabling savings enhances access to other things like being able to pay for health, being able to pay for education, and better nutrition. I would like to, several figures stuck in my mind from the gentleman from Bank of Ghana. He said 44 million. Out of that 44 million, I would like to know how many are female merchants. Because we have research and data that states that if you're able to increase the number of women in enterprise who are digitally aware, we will double the economy. So there is that drive, there is that need. Slide number 8 of Mr. Heaney's presentation. For financial inclusion, that drive to increase female participation in the digital sphere is very, very critical, because that can double our economy in Ghana. Thank you.
Banking today has changed significantly, and I think we can all acknowledge that. Customers are popping up on mobile payment platforms without an existing bank product as a referral. Fintechs and telcos have become complementary partners to mainstream banking as they seek to enhance its product offering and services to their customers. Collaboration has become the operative word for these companies in advancing their mandates in digital financial services, and through what we have witnessed, a scale-up in financial inclusion in Ghana. Ellie talked about it. And I'm sure MTN, you know more than me how many mobile money accounts exist in Ghana today, so I will not even attempt to put out a number. I think these developments have resulted in several collaborative outcomes, and I'll share a few. Ghana.gov formed out of a consortium of 3 local fintech acting as the brain behind the overall digital service and payment platforms for government agencies. GCB's electronic money issuance via USSD channel, MTN's partnership with MasterCard to provide secure global e-commerce digital payments to customers worldwide, Stanbic's collaboration with SlidePay to provide digital channels, Standard Chartered's collaboration with fintechs to offer our wealth management solutions via SC Mobile app, GIBS, in collaboration with banks and telcos, has enabled the instant credits and interoperability, we've talked about it, payment rails, making it possible for the development and the launch of a suite of payment and collection solutions. Banks have openly embraced the idea that we are complementary to each other's success and not competitors. This stance, coupled with our government's aspiration for making Ghana a digital and technology hub, could be crucial in helping to leapfrog our economy. Judging by the progress we have made so far, it is abundantly clear that all the players within Ghana's digital ecosystem need each other. And I think this was articulated by both speakers earlier. Telcos and fintechs could leverage the resilient anti-money laundering expertise, credit, and market risk capabilities of banks in scoping and mitigating risks related to financial transactions. Similarly, banks have a lot to learn from the agility and the speed of execution that telcos and fintechs are known for. Banks, fintechs, and telcos have a lot of enriched data that could be analyzed more effectively using new technologies like machine learning and AI to help advance financial inclusion and access for every Ghanaian. In the new age where digital platforms have become an essential of life, like we witnessed during the COVID-related lockdown last year, banks, telcos, and fintechs need to collaborate more to combat the escalation of cyber and other fraud, which Vera Baird had aptly described in the recent UK Sunday Times articles as an epidemic within the pandemic. Ultimately, we need to together promote the cross-pollination of ideas, experience, and expertise from either side of the triangle as a critical enabler for building capacity to address the operational and knowledge gaps and drive innovation. I think regulation also has a key role to play. Regulators will certainly play a crucial role in creating and enabling a strong legal and regulatory framework that would help address the challenges associated with the deployment of solutions. Enhanced regulation by the central bank and the strengthening of fraud detection protocols by banks will help maintain confidence in digital platforms and promote better financial inclusion. Recently introduced legislation such as the Electronic Transaction Act, the Data Protection Act, and the Cybersecurity Act offer greater data protection and privacy to customers and safeguard mechanisms that promote financial inclusion. The Central Bank FinTech and Innovation Office, established to oversee electronic money issuers, payment service providers, and the operations of non-bank entities, is certainly an opportunity to grow the pie while properly defining the roles and responsibilities for each of the players, banks, fintechs, telcos, very important. In conclusion, financial inclusion is multifaceted and diverse, embracing a number of initiatives for both the supply and demand sides of the financial ecosystem. Payment platforms such as Ghana.gov will, beyond acting as a single point of access for all government agencies, ultimately boost confidence in the financial ecosystem and accelerate adoption. Banks will continue to play a leading role in the overall quest for financial inclusion and sustainability in Ghana and the sub-region. The Ghana Association of Bankers continues to work and collaborate with the central bank and other key stakeholders such as GIBS to drive a cash-light society and drive key policy reforms in the national payments regime to provide a platform for banks, telcos, fintechs, digital financial services to co-create and innovate for a better inclusive environment. Standard Chartered as well remains committed to partnering with the central bank and other policymakers to drive financial inclusion and a cash-light society. Having operated in this market for the last 125 years, we have pioneered new solutions and innovated to meet the rapidly changing client needs at the right scale. We successfully rolled out our fully digital bank on mobile, SC Mobile, across Africa to promote financial inclusion. Globally, we set up SC Ventures, which is a business unit that is created to promote innovation, invest in disruptive financial technology, and explore alternative business models in collaboration with other banks, fintechs, and telcos. Through SC Ventures, we will continue to roll out platforms across our footprint, such as Solve, which we've currently rolled out in India, which has improved SME access to financing and other support services. Another platform is called Nexus, which we've rolled out in Indonesia, which offers banking capabilities as a service and a lot of initiatives that seek to collaboratively enhance the capacity of fintechs and service providers. We are looking to progress this level of collaboration and partnership in Africa, where SMEs and individual consumers could benefit immensely. As banks in Ghana, we are committed to continuously partner and co-create with fintechs, telcos, and other stakeholders in the digital ecosystem to provide better acceleration, dynamism, creativity, and stability required to achieve the scale and digital aspirations we have all set for ourselves and businesses as a nation. Thank you very much.
Now, the lady to speak to us is wearing a couple of hats. She's an economist and a technology consultant with expertise in financial technology and payment systems, as well as business setup and regulatory compliance. She's passionate about harnessing the power of technology to create and deliver solutions. So on one hand, academia and research. On the other hand, she's the CEO of the Ghana Chamber of Technology, which brings together many organizations in technology, fintech, and other things. Ladies and gentlemen, Dr. Augustina Odame is our penultimate speaker. Please put your hands together for her.
This journey from the inception of mobile money to the widespread availability of digital payments across the country and the growing number of Ghanaians employed within the space is a wonderful illustration of the possibilities of leveraging technology to democratize crucial services and opportunities to all Ghanaians, regardless of their geographic and demographic stations in life. To continue on this upward trajectory, there's no denying the need for stakeholders to collaborate on one, further developing the digital payments ecosystem without compromise to the stability and integrity of the financial system and ensuring the protection of financial consumers. And two, leveraging the ecosystem to realize the immense potential the digitization of payments holds for accelerating various national development outcomes. This includes financial inclusion and economic empowerment, increasing the effectiveness and productivity of key sectors of the economy. We have an example of the agricultural sector and the digitization of cocoa payments along Ghana's cocoa value chain. Improving governance by way of increasing transparency and reducing corruption. We see that in the example of plugging leakages and increasing transparency through the digitization of various public sector payments, such as the ports and harbor payments, etc. We have made great strides as a country, and from the fintech perspective, discuss a few key areas or issues we can continue to tackle collaboratively to make even greater progress on our journey towards a cash-light Ghana. First one is working together to create and deepen the existing markets in order to deepen financial inclusion. One crucial link on our journey towards a cash-light society is the ready market for financial deepening. And by financial deepening here, I'm referring to increasing the provision of financial services, both with regards to a wider choice of services and with regards to better access for different socioeconomic groups. According to the World Bank's report on payment aspects of financial inclusion, consumer awareness and financial literacy is a key catalyst driver of access and usage of transactional accounts. Ensuring consumer readiness, such as enhanced financial capabilities and adequate consumer protection, are key to realizing the full benefits of digitizing payments while minimizing loss and other adverse experiences for consumers. Consumer readiness requires that individuals have adequate access to and understand and feel comfortable using digital payments to meet their financial service needs. This includes the products. Here we have the product design and modalities, the inclusivity of that, the communications around that, and how well the terms and conditions and modalities of these products are communicated to the consumers. We also have the understanding of the providers and how they operate, and the various platforms and devices used to access the products, such as the mobile phones, web apps, etc. This is where tech savviness comes into play, as well as the payment processes and the consumer rights and recourse mechanisms involved. By payment processes, if there's a set out procedure that you believe you have communicated well, and in use, it does not translate into delivering the results expected, whilst you might be able to theoretically say, well, it's your fault, at the end of the day, we are all working together towards something and it does not help that. Customer trust and confidence in various aspects of the payment ecosystem are fundamental factors that affect uptake and regular use by low-income consumers. This is particularly true for women, youth, and other demographic groups who are less familiar with formal financial services and digital payments due to being historically excluded in one way or form. Indeed, digital payments could be less effective and even have adverse effects if consumers do not view it as safe and reliable, or if they have negative experiences when introduced their products and services in the system. In the case of digital financial services, examples abound of consumer trust being lost due to simple problems that could likely have been addressed with the right education or design solutions. The acceleration of digital payments during COVID lockdown, where market women and men who would roll their eyes at you when you asked previously whether they had Momo, were now ever willing to accept Momo, also saw an attendant uptick in fraud, as new consumers who did not have the knowledge and fraud awareness were compelled to transact digitally. This is far from a loss of X amount of Ghana cedis and a number of disgruntled customers. It's go way deeper. The loss of trust will have people deciding to do things like keeping their monies under their beds rather than at the bank, as well as several decisions decidedly in the opposite direction of the nation's cashlight agenda. MTN has on its part done and is doing significant work to educate customers and mitigate fraud. And the banks also do their part. The Chamber of Technology is also doing its part in building member capacity and support to ultimately be able to address some of these issues. And the Chamber members, individually, through education and product design, are doing their part. There is also existing collaboration that we can see between PSPs and banks and PSPs and telcos on various projects. And in those projects, we see the effectiveness when the strengths of the various parties are leveraged and brought together to work towards the common goal. For instance, the network of the telcos and the network of the bank, as opposed to the product of a fintech, and then the communication plus the network is able to reach and address the issues that we needed to address. Academia is also stepping up with the UGBS holding this April as Financial Literacy and Awareness Month this year. It will be great to have an acceleration and consolidation of ongoing government activity as well, and intervention in this space, and increased stakeholder collaboration. Increasing access to financial services through savings credit, insurance, and other financial services for households and firms is critical for Ghana's national development. These financial services facilitate investment, savings, and risk mitigation, all of which contribute to economic growth, job creation, and poverty reduction. It's such crucial to address this issue to ensure these benefits are realized. The second issue that I'd like to throw a little bit of light on is on digital identity. We usually hear of a digital ID in the sense of documentation and verification vis-a-vis KYC formalities for accessing critical services and as a necessity to effective implementation of targeted social protection programs. However, in the quest for a cash-light, increasingly digital economy, we need to step back and reassess digital identity beyond its primary blanket implementation. We have data-rich IDs, such as our biometric national IDs and passports. However, if I'm accessing a service or at the point of a service access, where at that point the only verification needed to verify is whether I'm 18 or not, should I need to present my passport or national ID with its rich data, increasing the risk of identity theft and other privacy violations should the ID fall in wrong hands? There is the need for a holistic consideration of digital identity, where the data subject or owner is the data controller, where citizens can share the details necessary and sufficient for any purpose, including regulatory ones, at any point in time where they would like to verify their qualification to access a service. This is especially important in view of the Continental Free Trade Agreement and increasingly digital trade. If all I have to verify at a point is whether I'm a citizen of ECOWAS to access a service, and if that service provider at that point does not have the adequate permissions and protections to handle sensitive data, how do I give them just what they need without opening myself up to undesirable consequences? This is something that stakeholders we can work and collaborate on to figure out. Digital trade has established a considerable footprint already, with business-to-business e-commerce transactions estimated to be worth over 15 trillion annually, and business-to-customer transactions a further 1 trillion. African e-commerce is also rapidly growing at an estimated annual rate of 40%. Indeed, the digital economy in Africa is expected to grow to over 300 billion by 2025. And this is if the pandemic has not revised this even further upward, on the back of massive mobile penetration, among other technologies. The focus here is two. One, to not exclude people from services based on their inability to obtain more stringent ID documents. And two, to protect the data and identity that people do have and give them ownership and control over these data and identities. Finally, as the government has set the intention and is taking steady incremental steps towards the realization of the national digital agenda, it's vital to bring everyone along. A fully digital public sector where the private sector remains largely manual is unlikely to achieve the intended benefits of digitization of payments. For instance, with revenue mobilization, if businesses have majority manual processes and bookkeeping, only to pay digitally at the point of paying their government obligations, there is still that significant gap for verifying and accessing reports upon which certain payments are made. Over here, I'm making reference to the informal economy, which represents a larger chunk of our economy. It therefore makes economic sense to loop in the rank and file of the private sector, especially the informal sector, so we can digitize at every level. MSMEs cannot be left behind. If we leave them be only to digitize at the point of meeting their payment obligation, it becomes an expensive bottleneck to squeeze through. It is cheaper, easier, and more efficient to digitize services right from the base. Also, as the ecosystem matures, it's important to ensure that the economics continue to work to maintain an enabling environment for innovation and expansion of digital financial services. This is to reiterate the point that Eli made earlier about it needing to be a win-win-win scenario in order for us to see the progress that we all desire. The full benefits of digitizing payments can only be realized if digital payments are if not more, ubiquitous, affordable, easy, convenient, and secure as cash. And stakeholders need to work together to ensure this, and we will.
Ladies and gentlemen, Kwame Opong, Head of FinTech Innovation, Bank of Ghana.
There's a lot of conversations that have been had about this whole sector digitization and payments digitization and the efforts to collaborate. But I just wanted to highlight 3 key documents in addition to the payment laws and everything else that is put out there. 1, the National Financial Inclusion and Development Strategy. 2, the Digital Financial Services Policy. And the third is the the Ghana Payment Digitization Roadmap. Now, these three documents were put out around the time COVID was really battering us, but the content of these documents have guided and will continue to guide us in our efforts to drive digital payments. We have all seen over the years a few interesting innovations that have come onto this market. It's particularly heartwarming to hear Manta's speech, making reference to some of the things that some banks in Ghana have done within this sector. But let's take a step back to what we can also do, not just from a regulatory standpoint, but from a government standpoint. Now, for any of these initiatives to work, so you look at a country like Norway, you look at some of the references that have been made, there are some key elements that are important for you to achieve some of these objectives. One, you need to have a strong digital identity underpinning your digitization efforts. And I think one advantage we've had is the creation of our Ghana card, the National Digital Identity Card. Second, you also need some kind of digital payment ecosystem. Now, we're fortunate in this country that our regulatory framework was very forward-thinking, and to that end, it paved the way for the creation of mobile money, the launching of mobile money services here in Ghana. Subsequently, some other policy interventions were introduced, and then a Payments Act that finally also looked at bringing on board the fintechs, now called the payment service providers. You also need some form of digital content, which makes reference to some of the things that Dr. Odame has referenced. And the fourth would be digital authorization. So these are issues around how I authenticate myself as Kwame Opong for any service that needs to be provided to me, or how I determine in that authentication process what I can also use to establish how much information I want to make available to a service provider. And these things are important from a data protection standpoint and from a consumer protection standpoint. So I'll give you a sense of what Ghana's architecture looks like and what our current state of affairs is. Now, in view of what I've just described, the first thing, we've talked about the national ID and the enrollment that is going on. Second, the fact that we have interoperability in payment, so a payment ecosystem that is not fragmented and is operating in silos, but is actually operating fluidly across different platforms. So we have the benefit of a triad, going across mobile money platforms to bank platforms and to eSwitch. So whatever type of service platform and ecosystem you're in, for the fact that we've established a national interbank and payment settlement systems, their platform is able to allow us to seamlessly transact across. Next is a fintech ecosystem. I think the dynamism in the fintech ecosystem, I'm not going to overemphasize. You have heard from the CEO of the chamber, and I believe at this point, you may at some point have used one or two fintech services. It's important that you give them some feedback in terms of your experience with it. But the goal, if you look at everything else that is happening, in comparison to the four key elements that I highlighted, you're seeing that we're actually an ecosystem that has some of these things going on already. Finally, maybe make a quick reference to interoperability from the perspective of having payment infrastructure. So we have our GH-Link, GIP, and all these other critical infrastructure in this market that is enabling that seamless transaction across board. Now, I'll talk a bit about Bank of Ghana's role in all of this, in terms of how we view a collaborative ecosystem. Now, you heard a lot about collaboration, which again, I'm very happy about, because often you see the energies and efforts fighting in the other direction. The Association of Bankers, the Telecom Chamber, who represents the mobile money providers as well, the Chamber of Technology, have all been working together for many of the things that you may not actually have noticed. And we continue to work on these things, and we'll work with them as a central bank to ensure that that collaboration is not just in word, but is actually happening in action. So how we view this is there's an underlying layer, a foundation of robust and enabling regulatory provisions, laws like the Payment Systems and Settlements Act. You have other directives and guidelines that we continue to put out, the existing banking sector laws. These govern the entire ecosystem. Secondly, all of this activity, you may notice, sits on the banking rails. So mobile money, payment service providers are all operating rooted firmly in the formal financial sector. So that's why there are partner banks who work closely with these service providers. Second, you have the mobile money ecosystem itself. Now, these would be the service providers like MTN Mobile Money and Airtel, Tigo, Vodafone, ZPay, Yap, etc. Then you have some key enabling infrastructure which we've talked about, the ID, National Property Addressing System, the Ghana Post GPS, which addresses a very important element of not just who a person is, but where they are, or how to locate a place digitally. And then, of course, interoperability. Now, upon all of these set of elements that I've highlighted, you also have the last layer, which would be the payment service providers or the fintechs. And so what you see is there's an interdependency across the different actors within the space, running on a solid foundation that ensures a certain level of safety and security of the ecosystem. Because our goal as a regulator is to ensure security and safety. Even in our efforts to promote mobile money, payment service providers, banks, and all the other actors that are actively promoting financial inclusion, one of the things that we are very carefully and painfully aware of is the reality of risks. Now, as a central bank, these are not things we're taking lightly, and so there are several measures we're putting in place. There are competition risks, there are liquidity risks, there are cyber risks, fraud was mentioned. All of these are risks that we've been taking very careful and painful efforts to examine, understand, and put the right measures in place to be able to address. And so for those of you who have gone through our licensing process, you can attest to what rigorous endeavor that is. Hopefully by the time you are done with it, you do see the value in that whole process and the confidence that it gives you. These are all risk areas that as a central bank we're looking at very carefully, thoroughly, and in detail, using a lot more of forward-thinking analytics to understand and rightly calibrate the risk and the necessary efforts in terms of mitigating them that needs to be applied. So a few things that I'll touch on. One, the fact that the ecosystem is rooted in the formal banking sector. Two, the licensing and supervision efforts also, first of all, seeks to ensure that you have properly governed institutions within the sector. We cannot have an innovative sector and a fintech ecosystem in a national digitization effort that is not supported by properly regulated and governed entities. So this is something we take very seriously, and that reflects in our licensing process. The final thing I'll just highlight is the fact that we're using certain supervisory technology tools. So yes, innovation is not only within the remit of our service providers, we internally are also invested in building the right tools and capabilities to know what's happening where, how, and to be able to sufficiently monitor and govern this space so that we can achieve our goal of allowing safe innovation on the market for the benefit of consumers, for the benefit of the economy, and the benefits of the businesses involved. So I'll give an example with COVID-19. I remember when the potential of a lockdown was upon us, there was an engagement with the entire financial sector. And the leadership of Bank of Ghana ensured that that process was collaborative. It was a very firm and straightforward conversation, as some of you who were part of those may remember. But in the end, we were able to establish certain things, come to certain understandings that have given us the confidence, and I believe when I look at the enthusiasm with which collaboration is embraced, I can see that the roots also, there are some roots from this. Through that process, we're able to relax the KYC requirements so that you could use your telecom information registration data to sign up for very low KYC accounts, controlled limits in your transactions. We're able to introduce a free peer-to-peer transaction under 100 cedis. I believe some service providers have continued subsequently. Your daily transactions were increased. The monthly balances on your wallets were increased, because this is also a point, as Dr. Dami mentioned, there were some merchants who were sort of caught flat-footed. Previously, they wouldn't have accepted mobile money payments. but now they found themselves in a situation where that was the only way they got paid. And so it was important that we created and accommodated them in a way that they could continue to use the service for their own safety and also in furtherance of our agenda. I'm just going to run through a few other interventions that, in addition to ensuring that this space is safe, when it comes to promotion of fintech innovation and digitization, some of the key interventions that we put in place so far. First has been an inward remittance guideline. Now, this has looked at the fact that we have several family members and friends who send monies to relatives locally, and we do see the value that innovation is bringing into that space in terms of reducing cost and the convenience that it introduces. And so we brought a guideline in place. We put that out there to adequately govern the activities of service providers who are engaged in this. Next, we also introduced a crowdfunding policy. Crowdfunding is something that a lot of you have already been involved in one way or the other, but it was important that we ensure that consumers are well protected. We ensure that the models that are being introduced are well governed and are in compliance with our existing laws. And most importantly, we're not allowing anyone to use these avenues and innovations as a channel to do money laundering and any undesirable activities such as financing of terrorism activities. Of course, issues around liquidation procedures and protecting contributors' interests were also firmly grounded in this policy. Next is interoperability. So this is a bit dated, but there was an update to interoperability. So you may not have noticed, for instance, that you no longer pay up to 1.5% if you're sending across network. The maximum that a service provider can charge you is 1%. There were some other changes in there, but they were more to the benefit of the ecosystem and the service providers themselves. Next is merchant payment, and this is very important for us as a country. The bulk of our digitization efforts have to be focused on merchant payments. This is why we're taking the painstaking efforts to ensure that we're working with everyone on GHQR. The cash sits mostly between people paying businesses. This is where the volume sits. Look in your own lives. On a monthly basis, how many people are you sending money to versus how many times are you making a payment? If we really want to uproot cash, or at least reduce it to the barest minimum, we absolutely have to look at merchant payment. And we have to be able to do that collaboratively as an industry and not single-handedly. No single service provider can achieve this objective without collaborating with others. So we also have a sandbox pilot that we've been running. The goal of this is we recognize the fact that innovators are always moving in 10,000 directions at the speed of light. It is important that as a central bank that gives approval to the products they bring onto the market, we are able to thoroughly assess them. But often, that thoroughness also could be at the expense of a quick time to market, which is a critical ingredient for success for any service provider, whether bank, mobile money operator, or fintech. And so a sandbox platform allows us to be able to do that in-depth evaluation and be able to give a yay or nay vote on a product or service before it's released onto the market. We've learned a lot from COVID. We're on our own, but we're not incapable of solving our problems. Neither are we incapable of taking advantage of defining what the future looks like, defining what the new economy looks like for ourselves, for our benefits. And so I entreat you all, as you have all said in this conversation, every speaker prior to my being here has spoken about collaboration. Know that the central bank continues to be behind you, will continue to collaborate with you and provide you the necessary support and the enabling environment for you to be successful for our country, for our citizens, for our economy, and for your businesses. Thank you very much.
Thank you very much indeed. This is the MTN Momo Month.